two experts, VG Kannan, the CEO of the Indian Banks Association, as well as Pratip Chaudhuri, the former chairman of SBI. Good evening, gentlemen. Thanks so much for joining us on this Friday's edition of India Tonight. Nayantara Rai in New Delhi. Mr. Chaudhuri, let me come to you first. A lot has been said about these consolidation exercises. It was first embarked upon by the former finance minister, the late Mr. Arun Jaitley. Nirmala Sitharaman carrying that forward today with this big bang announcement, which he began by saying is to kickstart the economy, is to bring it to the growth path of achieving the Prime Minister's vision of $5 trillion. Sir, before that, we need to get the economic engines back running. We've got a quarterly growth of 5%, the slowest that you've seen in 6 years. But having said that, today's announcement, as far as the mergers go, what did you make of it? Do you see any obvious synergy besides the ambition of the government to have large banks and fewer banks?
Obviously, because there is a proliferation of so many banks and they were all lookalikes. They really didn't have any, what is called an USP. So now with this, there will be cost rationalization. For example, I give you an example that in some of the large IBC cases, now there are 10 banks, of which now some of them would be merged, so now there will be 6 banks. So what is called the committee of creditors, that would become more compact and that would become easier to handle. And similarly, in all the banks, this exercise was being repeated, and no particular value was being derived. For example, if the banks are considering some 5,000 crores to Indian Oil Corporation or some such thing, now the same proposal will go to A bank, B bank, C bank, D bank. So now instead of that, it will be going to fewer banks. So there would be cost rationalization and process rationalization. Further, if you look at any of the commercial centers of the country, for example, Nariman Point in Mumbai, or Nehru Place in Delhi, or Gurgaon, or in Chennai, or in Bangalore, Residency Road, or Brigade Road. So there are large number of these industrial finance branches of even this Canara Bank, Syndicate Bank and all that. So now those branches can be consolidated into 1 or 2 and will be as effective as there would have been with so many branches. So large number of branches do not necessarily mean more delivery, but on the contrary, we need compact banks, and that is what has been attempted today, and I think we should look to it with hope and positive expectations.
You have positive expectations, Mr. Chaudhuri, but I will also ask you this one question. You've headed SBI. You are very well aware of the unions of the bank employees. We can talk about efficiencies. Will they even allow the obvious need for retrenchment that will have to be carried out? If this exercise has to be successful, very tough decisions will have to be taken as well. Do you see that becoming a reality?
I think we should not see a ghost everywhere. And I think you are seeing a ghost where none exists. In fact, I spearheaded the merger of State Bank of Saurashtra into State Bank of India, and then even without government intervention, State Bank of Indore was merged into State Bank of India. And in fact, most enthusiastic response came from the employees. For example, in State Bank of Saurashtra, we gave them an option that whether you would like to live with the State Bank of Saurashtra's terms of service or come to SBI service. Without exception, every employee came to the SBI terms of service. And here also the government has said that whatever is the best facility available in these 3 or 4 banks would be made applicable to all. And secondly, looking to the age profile, there is a natural attrition about 3 to 4% in the number of employees. So therefore, without undertaking any retrenchment, there would be rationalization and more productive use of the staff, and I think there would be a much bigger figure when it comes to business per employee.
Mr. Kannan, good evening. Nirmala Sitharaman announced the massive consolidation She announced the massive recap and the funds that are going to be provided. And then she also talked about corporate governance and the banking reforms. I want you to address the elephant in the room. While we're talking about independence of banks, will their boards even enjoy the independence to study the proposal as announced by the finance minister? And if they don't agree with the merger, even have the guts, the audacity, or even the belief to strike it down? It seems ironical, doesn't it?
I can tell you one thing is all the mergers which has happened in the last two occasions, especially the ones which were done by SBI and its five associate banks, and prior to that, the merger with State Bank of Indore and State Bank of Saurashtra, have always issues saying that we are going to lose the parent bank, etc. But at the end of the day, we found that after a couple of years, the merger becomes very smooth, beneficial to one and all, the customers, the bankers, and there's a huge cost efficiency in avoiding all this duplication and triplications. Imagine having one particular building having 6 branches of the same bank, banks of the same type. All these 27 odd banks which are there before, and all almost similar characteristics, similar exposure to all the banks, and almost a replica of each other. I think overall this kind of large mergers will be beneficial. Going forward, as regards the announcement on the governance, I'm sure each of the banks will take its call as to how it will be benefit. And I'm sure all of them will see reason as to why there's such a merger will benefit. As regards the proposals are concerned, I presume that you're talking about the credit proposal. I think independent decisions are being taken. But as regards the proposal on the merger, I'm sure they will see light at the end of the day and see that going forward this will probably be best. In fact, I am a very strong votary of this mergers. I've been a votary of this merger for the last 5 years. And I'm glad to see that we will finally end up having 6 very large banks, which will cater to the large corporates, the mid corporates, as also provide high quality services, avoid duplication of IT services, and get the best of the IT solutions because the cost will get rationalized. Overall, I think it's positive. Yes, and to some extent, we would prefer that more of autonomy is given so that the decision to recruit people from the market may be taken up, recruit people for the specialist jobs may be taken up, and pay market related salaries to get the best, which could further ensure that these banks now come out as world class and start attracting investment.
Kannan, when you have 6 large banks,
yes.
Mr. Kannan, if there has been the biggest pain point in the economy perhaps has been the lack of credit offtake, the tumbling down of the economy thanks to the IMF's crisis, which will turn 1 year old next month. Mr. Kannan, what I want to ask you is that when you will have these new banks, the new avatars of these banks, strong banks, 6 very strong banks, which are publicly owned, should I jump the gun and also remember Nirmala Sitharaman on 5th of July talking about proposals of the 51% equity ownership and all of that? Or is that, too much into the future?
Yeah, I think you can't simply say the merger is going to become panacea for the problems of slow growth. That's certainly not going to be the case but at the same time, decision making will be faster for the large corporate advances because each of the banks can take a large ticket exposure, and going forward, any resolution, etc., will also be faster because there will be fewer number of banks which will be exposed to a particular corporate. As regards the 51%, I think whether it's 51% or higher, I think if total independence is given, that there won't be any direction from any organization for them to take any decisions. And not even the nudging. I'm sure they will come out tops with all this support, and such large banks can actually be one of the best in the world.
Prateep Chaudhuri, you began by saying that you oversaw a large merger while you were at SBI, heading SBI. So, talk to the viewers of ET now. Explain how all of this is going to take place. It's also coming at a time when NPAs are still there. Look at the kind of provisioning, which, for example, has had to talk about. I'm sure a lot of the consumers are also worried about, what's going to happen to their branches, their deposits, their checkbooks, their passbooks. They will obviously have all of these obvious questions.
Absolutely, but I think this time the merger has been better planned, and in fact the secretary himself said that the basic consideration has been the computer system, and only the banks with similar computer system or technology platform have been brought together. Since in the SBI merger of the 5 associate bank later and 1 each earlier, this problem did not happen because we had the same, a technology platform. And in merger of these 5 banks, not a single account had to be, number had to be changed, because it was done so seamlessly that customers did not have any difficulty. And secondly, for the retail customers, it is not the experience would not be any different except for the signboard, that instead of United Bank, they will see Punjab National Bank. For example, today instead of Vijaya Bank, they see Bank of Baroda. But otherwise, even the savings rate of interest or the fixed deposit rates of interest are roughly similar, given 10 basis point here and there. So the retail customers on the deposit side will not see any change, whereas on the borrowing side, I think this will give the banks greater opportunity to concentrate on customer service. I give you one example. You look at these 10 public sector banks, I think out of them 6 do not have a credit card product. Now, credit card is such a basic product for a bank. Now, if one of them has credit card product, for example, Bank of Baroda and Vijaya Bank may not have had. Now, Bank of Baroda have it as a credit card product, so that will be unveiled to the Vijaya Bank customers also. So, I do not think the customers would anyway be disadvantaged. In fact, they would enjoy the benefits that are available to the largest, and all the benefits would now be available to everybody. I give you an example of again SBI. Now, SBI compared to the associates, associate banks did not have the ability to give large foreign currency loans. But there are customers who were wanting large foreign currency loans and they were exporters. Now, when they became a part of SBI, it became much easier for them to access foreign currency credit. So, let us not look at the downside all the time. You can start digging and you can come out with so many of them. Let us look positively that there are so many upsides. And on balance, I think the advantages far outweigh the handicaps.
Mr. Chaudhuri, there has always been one criticism, and it has always been said between the public sector banks and the private sector banks, and maybe the public sector banks are not fully autonomous. Whether that notion is fair or unfair, because the government is also the largest shareholder and a representative on the board. What is it going to do for that argument, for all the naysayers who says this is why private sector banks are better than public sector banks? And have you been able to do any number crunching as yet to see if the government's hold on these banks continues? Because, that's also very important when we talk about financial inclusion.
Yeah, for example, recently the merger happened of 2 large telecom companies, Vodafone and Idea. So there would have been an economic rationale, there would have been a business rationale to merge. Now, can or should the then Idea managing director come and say, I don't like it, I won't allow it to happen? No, this is corporate democracy. Whatever the majority shareholders want has to happen. Like whatever the majority voters want, that party comes to power. So in this, I don't think we can quarrel about this, because the majority shareholder has approved this, and there have been enough discussions and enough explanations, but you cannot, satisfy every doubting Thomas, the last doubting Thomas. So let us give it a try and let us see. I think it should work out.
Okay, I have two gentlemen with me on India Tonight who are very happy with the big bank consolidation that has been announced. This is the Narendra Modi government's game plan to have a strong banking landscape. 27 public sector banks in 2017 will be consolidated to 12, as has been announced today. Gentlemen, thank you so much for joining us on this Friday's edition. They both are impressed. They do believe that when we see the consolidation, we will emerge stronger, healthier balance sheet, more efficient. Let's see if the private sector banks will be given a run for their money.